Hi, everybody. I'm Nani Aguna, Senior Manager of Content Marketing here at Edison Partners. I'm joined today by General Partner Kelly Ford, as well as Operating Partners Marianne McDonough and Ryan Tognazini, all go-to-market experts within the Edison ecosystem. So we're here to talk about the 2024 Growth Index. So this year's index focused on metrics that matter for growth stage companies to tell their current and future stories. So basically, your data is going to tell a story whether you like it or not. And so this index helped us break down kind of some of what that data says and how you can use it to your advantage. So, Kelly, why don't you tell us why the growth index is required reading for growth stage companies?
So this year based on survey and engagement with our companies, we identified 10 key areas of a business with supporting metrics and the metrics that matter, for growth stage companies. I think the objective for us with this is to lend some perspective that takes in not only the data, but key insights and initiatives across our portfolio companies, and to, break it down and hopefully inspire those who may not be as scrutinizing on these numbers and the key initiatives to move the numbers. But at the end of the day, growth stage companies, you have to know what's going on in your business. The metrics may not be where you want them to be, but you need a stake in the ground. You need a baseline in order to know how to improve and where you're going. So this report for us is sort of a pithy, attempt at sharing the point of view of multiple companies across our portfolio, sharing data and benchmarks, but importantly, making them actionable so folks can, digest this and see how it applies to their business so they can continue to optimize and get better on these metrics.
Awesome. Thank you for that. So, as Kelly said, this year's index covered three go to market metrics: forecast accuracy, retention, and new logo health. So, we can go ahead and start with forecast accuracy. One thing that's kind of quoted in the growth index is that forecast accuracy is a sign that you understand how to sell your product to your customers and have the appropriate processes in place to ensure this happens with as much predictability as possible. So, Kelly, can you tell us why this matters from an investor's perspective?
If you don't get your forecasting right, you're not going to hit your plans. How you make the number, there's lots of inputs to that, but ultimately, it relies on forecast accuracy, and it isn't just a customer driven sales process, and there's a lot from marketing inputs, from the way your organization is designed, from the comp plans and in your ICP, like which customer are you going after, and are there a common set of characteristics? What segments are they in? What verticals are they in? Breaking your business at this growth stage, you have to break your business down into smaller pieces to really understand what's working, what's not, and to plan and to report on how you're doing against that plan. So from an investor, from a board perspective, having repeatability in the business and, dare I say, predictability is absolutely key, and relying not only the CRO, but also the CFO to be shoulder to shoulder on ensuring that the numbers that you put together in the budget and the plan are able to, that the execution against that is accurate, and you're able to report on performance pretty close to what your stake in the ground plan suggested.
And that when you're calling your numbers, you're hitting your numbers consistently, right? At the end of the day. I mean, that's what it's all about. I think the predictability thing is really interesting because especially for growth companies, right? We see people that start off on, I'm talking from the operator's perspective now, where as we grow, we sort of sell to anybody that sticks up their hand or anything that looks green, right? And then as we begin to mature and we try to scale the business, that's not a great strategy, right? To just, follow the money and bring in whatever works, right? We want to make sure that we're approaching the market from a productized perspective, for example. So we're selling the same solution over and over again, right? We want to make sure that we're selling to, the right set of buyers who have the right set of pain, that we've got that product market fit, right? So all those things start to show up in terms of the strategy and the predictability and forecast accuracy. So Togs, you want to jump in and talk from the CRO's perspective about, again, why this is so critical and maybe give folks a bit of a go-do on forecast accuracy?
Yep. So as someone who ran a small business, this was critical to us. I mean, labor is your number one expense. And if you're not able to predict, bookings and billings that are going to be coming into the business, you have a hard time making payroll if you're in a scale up stage. And you can get into situations where you're starting to burn capital, burn cash. The goal really is to be able to call your number on day one of the quarter for the full quarter going forward and be within 10% of that number. So if you're going into Q1 and you say you're going to book $1 million, you should be somewhere between 900,000 and 1.1 million. And it allows you to actually plan the business. You can hire ahead of the curve. You can make investments before because you know that forecast is going to be accurate. If you're unable to do that successfully, first of all, as a CRO, your time is likely limited in the role that you're in. And secondly, you're creating challenges for the business in terms of how they invest. So the thing that I would go do is go back and look at your sales process and make sure that as you're looking at your opportunities, that the things that you think you have in certain stages are actually in those stages. And having things like buyer-driven exit criteria to move from one stage to the next is hugely critical. Not what the rep thinks is happening, but what the buyer is actually doing to demonstrate that the opportunity is moving forward or moving backwards. And you should have a single exit criteria to move from one stage to the next, not 4 or 5 or 2, just one thing the customer does, like they ask for a proposal. So we generated a proposal for them, for example. That is an easy go-to, is to go back and look and see, fundamentally, is our process aligning with how our buyers want to buy, and are we following it?
I think it is worth sort of kind of blowing up in what Tog said was about definitions in the process, right? I think one of the things that we see a lot when we first meet companies where they are is that maybe a pocket full of people understand the definitions. Maybe you and I, Kelly, might have different ideas about those definitions, right? And so not only being able to center on what the process is, but really understand those gates. And the same thing is true for marketing as for sales, like through the entire funnel, life cycle. We need to understand and both agree that this moving from stage 1 to stage 2 means this, and this is what we do, and this is what we can expect. And a lot of times when companies are growing, they don't always take the time that they could and should to institutionalize and make sure that everybody's on that same page.
I'd agree 100%, and I'd add to that and to what Togs was saying around the customer-driven process. It's so common that a process gets thrown together with, X number of stages, and you're doing this activity in this stage, this activity in this stage, but it may be what the rep is doing. And maybe, yes, you're closing business from in moving a sales process along because of the sales activity, but not putting yourself in the buyer's shoe. If you're not putting yourself in the buyer's shoes on around that exit criteria, entry criteria and exit criteria for each stage, from the customer's point of view, the customer asking for that proposal, the customer asking for, pricing, the customer planning for implementation details in advance of closing, like whatever it is, those are strong signals that things are moving forward. Sales can do hell or high water heroics, to get a deal done. And sometimes that works, but it's usually not repeatable and it's certainly not scalable. So I think that notion of the customer driven stages that is truly about the customer, not about just the sales activity, check, what happens at each stage. And with that too, and if there's true discipline and alignment between sales and marketing on those definitions, to your point, Marianne, you can actually find things that get stuck. And then what are we going to do, sales and marketing together, to unstick them, right? And get them to that exit criteria and that point. So this isn't just a sales construct, and it's the accuracy is critical for all stakeholders. The execution of the disciplines to ensure the accuracy is CRO, CFO, shoulder to shoulder, and what you're learning in each stage and what's going on, because we have discipline and we're doing things in a repeatable way. Absolutely, those insights, marketing needs to be working with sales to glean them and to action them.
So let me just jump in, and I'm going to toss a question to Togs. Sorry, Nani, as I just sort of roll in. It was interesting, you mentioned something that sort of tweaked me a little bit, and that was learning, right? So I've been in organizations where, we get big deals that get stuck, and, a rep gets, put on the George Foreman grill to explain. And what comes across is, I don't want to bother the customer by trying to really understand what's happening inside their business. And I would say, Togs, that from your perspective, there is no such thing as bothering the customer. And I would think that most buyers would appreciate the fact that you, as the person who's trying to sell something to me that I need, wants to know, what does my business work like, and what does it look like internally for me? Is that a relevant thing to say?
100%. And I think the better you do asking thoughtful questions initially, the more apt you are to understand what's going on with the buyer. If you go in and it's like, let's get to the demo as quickly as possible, do you want it or not want it? You're sort of assuming that like the buyer is connecting the dots between some problem they're trying to solve and what you have as a way to solve it. And I think that's a big mistake. And I also think that early on, you're kind of allowed to ask not stupid questions, but questions just to try and understand and seeking to understand. We had an internal webinar here not too long ago, and somebody talked about that one of the top 3 things that buyers are looking for from sellers is helping them connect a solution to their problem. And if you're not asking good and thoughtful questions to understand what's actually going on in the business, who the players are, what do they care about, what are they going to get from this, how is this going to help solve their problem, like how meaningful is the solution to this problem, if at all, then I think you're going to struggle when you get in the later stage deals and they get stuck and you don't really understand why they're not buying. It's because you don't really understand even really what's going on.
Absolutely.
100%.
So let's move on to retention. So in the growth index, this covers logo retention, gross and net revenue retention. One thing the index specifically calls out is that a good looking NRR can mask gross retention or logo churn issues, but investors will find it. Kelly, I wanted to get your thoughts on that and just overall why these metrics matter to investors.
Use of capital is often, okay, let's accelerate growth. We need to add new logos. We need to, grow our existing customers. Well, if you have a, leaky bucket, you're putting things into a net and things are falling out, you got to fix that before you blow your dollars on adding more new customers that may not stick, right? So gross dollar retention, new logo retention, gross dollar retention, logo retention, and net retention are all critical. I think, your net, if you're a business that is selling largely one product or one platform, and and you're selling to small or mid-sized businesses. Well, it's more common that you're going to have higher churn than, someone selling to a large enterprise with, a more complex solution that was 6 figures plus and has integrations with your existing system. And there's all these reasons, all these things that create stickiness in terms of the value that that product is delivering and how entrenched it is in the business. So when we look at our portfolio, we have our portfolio companies, we do have folks who are selling kind of into maybe the small or mid-sized market versus selling into enterprise. If you're selling large enterprise solutions, there is a higher bar, and the expectation is, up mid to high 90s gross and 100 and, plus 105, 110, 120% net retention. If you're not achieving those numbers, the cost of acquiring an enterprise customer is that much higher. So like, you got to fix it. But it tends to be more of a focus in the boardroom, and certainly when we're looking at new investments, when you've got this velocity model where you're selling kind of the 10,000 ARR to 50, 60,000 ARR deals, and you're selling, you may not be mission critical yet, doesn't mean you don't have an opportunity to become that, but there's, you start to see gross retention maybe in the 80s, and you hope you can get to net in 100 or more. And there's a lot of, there tends to be a lot of focus on those types of companies with those models, trying to like continually optimize gross and net retention. And if you don't have more to sell the customer, your net retention is not going to move. So in those, in an enterprise scenario, there's usually complexity and the ability to capture more value over time. But when that small and mid-sized world, you may be limited in how much value you can actually capture from those customers. So the gross retention becomes that much more critical when you're selling, modest size solutions to kind of that segment of the market. And maybe, now it may be a good time to talk about maybe some of those levers and things that we advise our companies on, and we see from our companies that things they're doing to optimize gross and net retention. Who's up?
Absolutely. Marianne or Todd, any thoughts there?
Togs, this one's all you, baby.
Yeah, well, first off, I think looking at all three is super important. I do agree with Kelly. I think there's a lot of excitement around net retention and demonstrating your ability to grow and expand your customer base. But it can easily mask things that are happening with gross and logo retention. If you have a couple of customers that do some really big upsells or cross sells in the course of a year, but you're losing logos out the back end, or you're losing, gross dollars from other customers, net retention only really tells one part of the story. So it's useful to look at all three and make sure that you are building a healthy business, and that you aren't just getting a couple of customers who really buy into what you're doing and other customers who are sort of like can take it or leave it. So, in terms of things to be doing around that and investigating that, one is having clear lanes of who's doing what. So there's a lot of focus on, you've got some people have hunter farmer models, and then they have customer success on top of that. Some people have a single sales rep who sells the deal, and then customer success takes it over and manages it. And really, I think the first decision you have to make as a business is, what is the role of customer success in your model? Is it to delight the customer and make sure that they have as much possible success with the product, get them onboarded, make sure that you've got nice long lifetime value, and help ensure that they renew and you've got good NPS? Or are they a selling organization? And their job is to grow the customer through either upsells and or cross sells, growing the LTV of that customer over the lifetime of it. And I think that in principle is, and one's not better than the other. I think it just depends on what's right for your business, but being super clear on who does what, I think is first, and then you eliminate infighting, you eliminate confusion and friction with the customer. And then I think secondly, it's making sure it gets down to enablement and execution, some other things, making sure that everybody actually understands what is it that we have to go sell to our customers? What is the thing that they buy second after they buy something first? Do you have multiple products or add-ons that you can go sell to those customers, or is it more of like a consumption model where it's how do we get them using as much of our solution as quickly as possible, and what are the plays that we can do to help ensure that that happens successfully? But certainly, again, it's looking at all three of those metrics to start deciding who's doing what in the organization, and then making sure that they've got the right plays to actually go execute on those things.
So I have a couple of things from the marketing perspective to add here. The first is really around life cycle marketing. So we do not often see companies in their, early stages of growth who really have life cycle marketing dialed in, right? Where they are doing everything from, welcoming me as a new customer to offering me tips and tricks to then over time across a drip campaign, letting me know about not just news and happenings at the company, but, new product developments. And again, that's really where we would start to get, serious around education and enablement around cross-sell and upsell, right? So there's a lot of opportunity for us to continue to nurture those customers across their life cycle, that can help to actually meaningfully impact all these three numbers. And then the last thing that I'll say there too is bridging back to the customer success piece. We don't often encounter a lot of companies that come into this stage with customer success completely wired, right? They think of GTM as sales and marketing, and then when we start to say sales and marketing and customer success, a lot of different definitions, as Ryan said, but they are the three legs of the GTM stool. So if you don't have a robust customer success strategy, we can help, and two, it really bears putting your thinking cap on and thinking about how you can make the greatest impact on the folks that, that can have the greatest long-term value for your business.
It goes back to, with customer success, to like, what are your numbers telling you? Like, if your gross retention has an 8 in front of it, what is in your customer success team is focusing on cross-sell, upsell, like that's a misfit, right? Like, who's focused on health and, ensuring, the customer, and not just, touching base with the customer upon renewal time or trying to get them for a new renewal. Like, you need context on and definitions around what customer health looks like, so you're not surprised when the customer turns, or you can get ahead of any potential risk. And I mean, this kind of goes back to forecast accuracy as well, because if you have a handle, even with a high volume of customers, you can still be intimate with the data that tells you how healthy that customer is and if it represents churn risk. And that goes right back to your forecast accuracy. So I think there's often a misfit with the function of customer success and what people are expected to do, and the actual performance of the customers in terms of retention.
It's super great.
Hey, one other thing I would add here is, if you're in a scale up stage of a business and you're starting to see those numbers or those indicators go in the wrong direction with logo and gross dollar churn, it's a good time to go back and look at your ICP and understand, we started selling our product to this certain type of customer. We're scaling our business, so we'll take a paycheck or a check from pretty much anybody who's willing to write it. But as you scale the business and you start to see that some of those customers maybe weren't the best fit and they're starting to attrit and move out of the business, now your sales and marketing expenses going up because you have to put more on the top of the bucket, which is obvious, if you're losing more out of the bottom. But it is a good opportunity, and you should always kind of be revisiting that ICP and that segmentation and understanding, is this still our target customer, or is there something that's changed or that we've changed about our solution that allows us to kind of shift 15 degrees over here, and we should be targeting these folks? Because it can get very expensive very quickly, and you end up running in place. And I think that's what we see with a lot of companies that like never get past that like 10, $15 million ARR mark, is they're just kind of running in place, trying to keep up with all the things that are happening. And it all goes back to that original ICP and really understanding well the product market fit, which pulls in product, it pulls in marketing. I mean, it pulls in the CEO because these are strategic decisions. But they are super critical for businesses that kind of get out of that mode and move up to the 20, 50, $75 million mark.
And it's what you're saying about ICP. I mean, this is the thread across all three of these go-to-market metrics for growth index, right? Forecast accuracy. If you're not selling, if you don't really understand your different customer types and selling consistently the same thing to the same type of profiles, you can't forecast the business. If you aren't doing the same, you're not going to keep the customer, and Lord knows you're not going to be able to grow the customer. And I think it also as well to new logo dynamics, right? So what are you learning from your existing customer base and from your churn metrics and what you're doing to optimize retention? That feeds right back to how are you acquiring new logos and what is the profile of that logo? Well, guess what? All of it, the ICP, threads across all three, right?
But what's interesting about that, and Togs and I think sometimes people think that we're the ICP police, especially the last like 6 months, because we have been sort of banging this drum. Because when there's headwinds, right? One of the best things to do to recalibrate is say, okay, where do we have drift? Because it just happens, in organizations, it happens. You hire people, people leave, you get successful in one place and suddenly everybody wants to, jump on that train. And at the end of the day, making sure that everybody across the entire spectrum of your organization understands who that ICP is, and everything is as aligned as it can possibly be in every stage, phase, action, message, right? That's the stuff that's going to give you sort of the tightness of that execution. And that drift is a very easy thing to have happen, especially if you might be working in a team where they have a little bit of shiny object syndrome, right? And so it's really great to be the one at the ELT table saying, how does that fit into our approach to this ICP, right? Which is sort of one of the bad cop things that I always did in all my years around that table.
Kelly, you touched on it a little bit, but let's move on to our last go-to-market metric, new logo health. Can you talk about why this is important to an investor?
I mean, you need at the growth stage, every company should have multiple levers for growth. The growth in the now or this year's plan, and then having your sights set on what are additional, like how do you roadmap the business and your levers for growth over time relative to the addressable market that you have to go after. There just plainly needs to be a healthy mix of bringing in new bookings from new customers, and hopefully also as the company matures, having more to sell to existing customers. Depending on, we see more mature businesses might be 50% new bookings, 50% from existing bookings from existing customers. But early on, it's really, it can be 90, 80% of your bookings number is coming from new logos. And that, assuming you have the right ICP and you can build the discipline and be very data-driven in your go-to-market to build that repeatability and hopefully predictability in the business, and use of your capital, of your cash, always there's some element of that needs to be focused on always adding new customers, the right customers that you then from there. So it's kind of a, it's 101 for a growth business. You got to get really good at signing new customers.
It's interesting. Earlier, you said something that I jotted down on my little Post-its that are all over my desk, which I think I have so many of them, I'm not sure if they're useful anymore. But and that was be intimate with your data. So to me, this is one of these areas that's rife with potential actionable intelligence for the business, right? So if you're finding that new logo health is lagging or doesn't seem to be where you want it to be, and there's issues there, I mean, this is a chance to really get face down in the lake of the data that you have, which is, again, something that we are constantly saying to our operators, both in sales and marketing and customer success, right? You need to really understand what is, where things are along that buyer value chain and where they're getting stuck. So focusing on conversion barriers, right? Again, target the ICPs, experimenting with testing, doing the buyer journey work, which is another one of the things that Togs and I, it's like ICP, buyer journey, ICP. Well, there's a reason why we do that, right? And it informs all the things that we've talked about, these last two things as well as this one. Making sure you've got content excellence, right? Content, and collateral architecture that runs across that buyer journey that, again, is helping to drive that conversion, and then really, looking at down funnel marketing, right? So what are we doing? How are we engaging with the sales team to move things through? If we can improve conversion in a couple of different places, how do we hold hands when we start to get to the, sort of the lower belly of the funnel, where we can really impact, people's moving forward and converting and becoming a customer? These are the kinds of things that every one of our GTM leaders really needs to understand, right? How do we take these things apart and uncover where the issues are and then work together to solve them? Togs, anything to add to that?
I would echo what Kelly was talking about, just in the importance of being able to generate new logos. I mean, it certainly demonstrates viability of the business early on, especially when you're building a customer base. I mean, most of that is going to be new logos, but being able to continue to do it just demonstrates that you've got a real addressable market to continue to go after. I think in the last couple of years, new logos have been tougher to come by. And if you look at some of the survey and market data out there, I mean, a lot of companies, if they can get 20 to 25% of their bookings from new logos, in this market, that's a victory. But certainly you've got to continue to push for that and continue to work to get new logos. I think sales, when things get tough, will often default into focusing on customers because they're easier to sell to. And usually they're easier to get, add-ons and to get to the number, which is super important, and you want to continue to grow that. But, even seeing some situations where there's some compensation that starts to get bifurcated based on your new logo versus your existing customer performance, if you're selling to both in your role, as a way to continue to maintain focus on making sure that we bring in those new logos.
Great stuff.
Well, that concludes our conversation, unless anyone has anything to add regarding the go-to-market metrics or the growth index in general.
I actually would like to just add one thing is, so, we've sort of set up this thing where Kelly is representing the voice of the investor and Togs and I are representing the perspective of the operators. But I think that hopefully when people really spend a lot of time looking at the growth index and listening to this and the ongoing series that's going to follow with some of the other centers of excellence, one of the important things here is that it's as valuable for you, if not more, to be tracking and understanding these numbers as it is for your investors. So the good news is what's good for them is good for you, right? And at any given time, you could have investor scrutiny, there could be some strategic activity going on, right? We don't want to wait until that happens to really get these numbers in the best possible shape that they can be. And then also back to how you started is to construct the story around what these numbers really mean to our business so that we can proactively sort of have that in our back pocket when it comes at us.